you prepared for a hike in your rent that's coming this year? It is Tuesday, April 16th, 2019. It's a question that I want to ask. If you've been watching the news on what is happening in this country in our housing rentals, you'll discover that prices are going up. I was just looking at the rentcafe.com report, and it's interesting to see the amount of areas across this country on what it costs to rent an apartment. And things are not looking that great, especially as we begin to see inflation, prices of food going higher, medical costs going higher, car insurance going higher. So all these things have major factors on families and on their budgets. So let's just dive into the report. Let's see what we can learn from this as we begin to see the differences in price increases. The national average rent reached an all-time high of $1,426 in February of 2019, up by 3.6%, as you can see here in the chart, year over year. Of the nation's 253 largest cities, 92% have seen rent increases compared to February of 2018. Only 6% of those cities flatlined. Rents in the South continue to feel the heat, especially in Nevada, Arizona, California, and Texas. So let me dive into just a few areas here as far as what those rents look like. And for example, in Manhattan, New York, is the highest. Rent is $4,113, a change of 2.1%. Los Angeles, this is my area, California, rental $2,463 average price, change of 5.8%. Washington, D.C., $2,133, 2.7% increase. Seattle, Washington, $2,045 with a 2.6% increase. Chicago, $1,898, 4.7% increase. Denver, Colorado, $1,618, 4.5% increase. Atlanta, $1,425, 4.3%. Orlando, Florida, $1,402, 4.8%. Austin, Texas, $1,369 and 5.3% increase. And the list goes on and on. So rent prices experienced a 3.6 year-over-year change, with the average national rent reaching $1,426 a month in February. I'm sure this is good news for landlords, but not good news for first-time buyers. Of the top 20 largest U.S. renter hubs, rents in Phoenix witnessed the sharpest increase over the past 12 months, period of 8.6%, reaching $1,037. Las Vegas, with an 8.1% year-over-year growth that got February rent prices to $1,051. Los Angeles, this is my area. Los Angeles renters' pockets took the biggest hit, with a net increase of $136 compared to 12 months ago, taking Los Angeles average rent prices closer to $2,500 mark. Renters in Chicago, Illinois are next in line, with an $85 net change that took the average rent price from $1,813 last year to $1,898. The weakest net growth happened in Houston, Texas, 0.8%, with an average rent of $1,094. Here's another report that I pulled out from the Orange County Register. Los Angeles, Orange County, rents are rising at the fastest pace in 12 years, according to the local Consumer Price Index. The U.S. Bureau of Labor Statistics report the slice of the CPI tracking the cost of renting shows its expense in Los Angeles and Orange County rose at a 5.6 annual rate in March versus 4.8 a year earlier. The last time rent inflation was greater in any March was in 2007. The CPI also tells us that the overall inflation in Los Angeles was rising at a 2.7% annual rate in March versus 2.4 2.5 a month earlier. As you can see here on the chart, 1995 was at a low point, was negative in 2010. But after 2010, we can see increase in 1.3, 2.2, 2.4, 2.8 every year. And I don't see this trend really reversing, especially as we can't get enough renters out of the rental market into becoming first-time home buyers. So this ultimately is going to trigger family budgets to overspend as much as what's happening to people today. Ultimately, it's going to trigger family budgets to overspend as much as what's happening to people today. We're not seeing people first-time, home buyer purchase, investing back into their properties, landscaping, or doing some small remodeling around their home, painting, or doing a few things around. So instead, people that are renting are finding other ways to spend that money that really is not coming back to investing back in their future. So we see from credit data that they're getting further into debt. They need money. They begin to exhaust whatever they can and find available funds such as credit cards or personal loans to get them by. This is a lot of people, unfortunately, that are going this route, and they're not going to be able to pay down their debt ever. One of the culprit reasons is, not finding good career jobs out there. A lot of students that have gotten themselves into debt, not able to find a healthy career that they're able to make good money with a pension, are finding themselves having to rent for quite a while now. And as the economy is slowly turning, we're starting to see a lot of major corporations that are starting to cut back their workforce 10%, 15%. The recent merger of Disney and Fox Studios that happened in Los Angeles, they just laid off several thousand positions. And we're starting to see this across the country with a lot of retail businesses that are starting to close their stores or reducing their portfolios. So we'll see. This is going to be 2019 is going to be a very interesting year as far as what happens. So we've seen lower interest rates on a new mortgage, but most people are capped out on taking on more debt, and many people have not really gotten any further economically since 2008 recession. If you kind of look at your own situation, if you're an average person, have you seen your income double or triple in the past 10 years? Do you see yourself better off today than you were 10 years ago? I don't know, maybe some of you were in school, maybe some of you were at the end of your careers thinking you were going to retire, found yourself that you couldn't retire. So fundamentally, things have not changed. Homes are still unaffordable for many people whom are on average taking on more and more debt to get into homes. As we see rents that are rising, inflation is ramping up in many areas, and a lot of this is the weakening of the dollar. But we're at a point now where we could be in danger of rampant inflation if the Feds do not reverse their course. But I don't think they will, because everyone wants to keep things going through 2020 elections. Regardless of how many people are priced out of the housing market, which disappoints many first-time buyers, we need to be prepared on what's coming down and expose the truth on what's happening with our banking system that is crushing or crashing the economy. There's a fight to keep the low interest rates going forever, regardless of how it hurts the dollar. So times are ahead of us, and considering how tense things already are in our country, an economic downturn at this time will ultimately set off a very disturbing chain of events. Let me know what you think, folks, on where the economy is going in the housing market in your area. Please comment below and subscribe to the channel. Thanks everyone for watching. Stay safe and keep your head above water.